Welcome to the B.F. Anderson Technical Report for November the 4th. It's not the mathematical skill that's critical to winning. It's the discipline of being able to stick to the system. There are very few people who can withstand the losses emotionally and stick with the system. This is a quote from a book called The New Market Wizards. A great book, recommended highly. What this quote means is that there's always going to be investment alternatives that are more attractive than what you're currently doing. And I think it's critical that people understand and have confidence in their system. You know, back when I started in the business, I had a strategy which was a value strategy. See, there's really two strategies out there. There's two groups. There's the value strategies and there's the growth strategies. Now, I used to be a value manager. I was a value manager for about 10 years and found it kind of frustrating, didn't really understand it, didn't make a lot of sense to me. And then in June of 1995, I switched to a growth strategy because it just made more sense to me. I have confidence in it. So the advice that I'm giving here is that you need to get straight in your mind which strategies make the most sense to you and have confidence in them so that you can stick with them through thick and thin, because the problem comes in is that a lot of times the human mind just seeks out strategies that are winning and doing well, and will jump, then the individual or the investor will jump to that strategy, and then that strategy stops working, and the strategy that he left starts working. So it's basically going from the skillet to the fire. Now, I'm going to show you an example of that in some of our charts. So let's go to the charts. Unfortunately, the news is not good. We were hoping that this earnings season was going to result in a breakout of the indexes to the upside, and exactly the opposite is happening. We're breaking out to the downside. The earnings reports have been overall good for third quarter, but the problem has come in is that a lot of companies have given weak guidance for the fourth quarter. So we were really looking for a turn in earnings here. Now, I know that the election is a factor, and but I do believe that interest rates and earnings are more of a factor. So we'll have to see what happens on November the 9th. But here's the NASDAQ. Now, this is an index that's a broad index. You know, here is the 25-day moving average. Here's the 50-day moving average. Once you cross below the lower moving average and then both averages have turned down, that's not good. And also you can see that there's a support level here at 5,200 that has now been broken. And we'll just have to see what happens here. But the NASDAQ is, in my opinion, on a sell signal. Now, one thing I do want to mention about our strategy is we do hedge portfolios. Now, we do a very simple hedge, which is cash. We basically, once we start to see the tides breaking down or these indexes breaking down, we start moving portfolios into a cash position. And right now, we're in a very heavy cash position. We are defensive and cautious. Now, this is the mid-cap stocks. You can see the same problem here. Now, we've actually gotten the death cross here on a short-term basis on the mid-cap stocks. So the mid-caps are not looking good, have broken support. We'll just have to see. I hope this thing starts to stabilize soon. Here's the New York Stock Exchange. This is all the stocks on the New York Stock Exchange. Again, breakdown of the 25-day moving below the 50-day, and we're breaking support. This is where the big damage is being done. This is the small caps. This is where we really need to see strength, but we're not. It looks like a big kind of a rolling top here. Again, moving averages turning down. Indexes are breaking below support. Now here's the S&P 500, which is just a 500 stocks that we follow. Again, same problem. So I could go on and on with these indexes, but those are 5 indexes that pretty much cover every aspect of the market, and things are breaking down. Now, what I wanted to do is I wanted to take the NASDAQ 100. Now, the NASDAQ 100 is the most profitable 100 stocks I would say, in the world, and or at least in the United States. Now, I go back to 1999-2000, which was a bear market. Now, if we look at this, now, Ned Johnson of Fidelity, who founded Fidelity, always said that if he was on a desert island and could be given one indicator, what would it be? And he said the 200-day moving average. So this blue line here is the 200-day moving average on the NASDAQ 100. Now, this is what a topping process looks like. So in other words, you're getting a rolling over of the 200-day moving average. Then once we got the downturn in the moving average. In other words, the index did break the moving average, but we did not get what we would call a downturn till around November 13th of 2000. After that point, the NASDAQ 100 declined 70%. So it's a topping process. Now here, let's take this topping process. This is the year 2008. Again, you've got your 200-day moving average kind of moving sideways here, but then turned down here in July of 2008. And again, you can see what happened. The market dropped, the NASDAQ 100 dropped 46%. You want to avoid that, of course. Now, this is the NASDAQ 100. Now, I'm taking it to a bottoming process. This would be 2003. And you can see what's happened here. The price of the index got above the 200-day. The 200-day moved up. So that's what a bottoming process. So here's where we are now. This is where we are now. This year has been, 2015, 2016 have been somewhat of what we would call bear market years. In September of 15, we had a 20% drop in the NASDAQ 100, then a recovery. Then we had a 18% drop, and then a recovery. So here we are now, and you can see here's the 200-day moving average. However, it's still in an uptrend, and the price of the index is still above the 200-day. So this does not look like, using a little bit more of a long-term indicator, this does not look like a bear market. But can all this change and the index drop below the 200-day and the 200-day move down? Absolutely, positively, yes. So what we would say at this point, this is a time to be defensive. Now here's what's going on elsewhere that would be of importance. This is a 20-year Treasury bond fund. Now what we have to realize is that the Federal Reserve has had the economy on Novocaine since 2008. And if you understand the drug Novocaine, it basically deadens the pain. It doesn't resolve the cause of the pain. And what is unfortunate with this situation we're in, if the Novocaine starts to wear off, there's going to be some problems. So this has been since 2008 that the Fed has had the economy on Novocaine. Now, bond prices peaked here at this level, and the Fed has not really raised rates yet. But in the meantime, the 20-year bond fund has dropped 9%. Now you're getting a 2.5%, 2.4% yield on this fund, but it's declining by 9%. So that's a hard sell for me. Point is, why are bond rates going down if the economy is slowing? Could be stagflation. That's what it looks like. Now here's an example that what I'm saying is the last 5 years, or really since 2008, this has been the group you wanted to be in. Electric utility stocks, anything that pays a dividend. And you have to realize again about dividends, they do reduce book value. I don't know if a lot of people realize that, but it's kind of a wash where the company sends out a check to you, which is a reduction of cash to the company, which reduces shareholder equity. Well, I can beat that horse all day long. I don't think it's a good deal. But in the meantime, you can see here that these electric utility stocks, you're getting the same drop here as you're getting in the bond market. Now, one group that is holding up, I just wanted to point out, is the bank stocks. Now, here's Bank of America. You can see it's holding up above the moving averages, really in a nice uptrend. Well, again, if interest rates go up, that's going to be positive for the banks. Now, here's another example of one of the hot areas that everybody wanted to switch to. So think about it. You're frustrated with your existing strategy. You see these REITs, which are, again, dividend-paying situations. And then you say, well, I'm going to go after that thing that pays 2.25% dividend, and I'm going to abandon my old strategy. And then you get in about here, and it has now dropped 20%. This is a REIT, which is a real estate investment trust. Now, here's another area that I'm quite concerned about that's jumping out at me. This is a company called Caesarstone. They make countertop material. This is for, home renovation. The stock has dropped dramatically. Look at that decline. I mean, it is just, collapsed. Then you look at something like a Home Depot. This is, again, some of the past leadership. I was jealous of people that had stocks like this, and then all of a sudden, boom, these things are dropping dramatically. This is Lowe's, same thing. Now, why is this happening? It could be a slowdown in housing. It could be because interest rates are going up. It could be anything. That's the thing about the market. The market's discounting something here, and we're really not sure what it is. You'll find out, though, at some point. But you have to pay attention to the charts and the trends because that'll tell you in advance. Now, here's another building supply company, Masco. Again, you can see the decline. Here's a carpet company called Mohawk, just really coming down. Here's a paint company called Sherwin-Williams. Again, this was a hot area in the past. Now it's rolling over, coming down. Again, back to the utilities. Here's American Telephone and Telegraph. Again, coming down. It's just not well. Now, this has to have something to do with interest rates. So here's Verizon, same picture. So basically, in conclusion, what I'm saying is the NASDAQ has broken support. 5 of these indexes that I follow have all broken support. We would recommend that you be very cautious here, and cash, you should have cash. Be very careful at this point. Now, the election could be a factor. We'll just have to see. If you have any questions, give me a call. Thank you.